what are your key takeaways from Paul's testimony?
I think the most interesting thing about Powell's testimony yesterday was that he basically finally convinced the market that Janet Yellen was right. In December, Janet Yellen, the Federal Reserve, said there'd be 3 hikes. They thought 3 hikes would be appropriate here in 2018. The market didn't believe him. But after Powell spoke, and he expressed some confidence about the U.S. economy, and some people thought that he's maybe opening the door to a 4th hike, the market came around to 3 hikes, which is what Janet Yellen had said before she left. So I think that it helps close the gap between what the Federal Reserve's forecasts were and where the market's pricing.
And many market participants think that Paul sent a fairly strong signal that they're going to have 4 rate hikes. So what do you think? Do you think they should prepare for 4 rate hikes this year, or just the market reactions to show them just the three times?
Sure. So I kind of think that I try to think as a strategist, the tactics involved. And so here's what's happened. In the past, the Federal Reserve has been criticized for over-promising, under-delivering. Like in 2015 and 2016, they promised to raise rates more times than they did. And so Powell, this is Powell's first big meeting is in March. It's the first time there'll be new dots. This is not the time to overpromise again. It's better to wait. And because what could happen? At his first meeting, he's going to raise interest rates. He's already going to be able to establish anti-inflation credentials. But if he has to take the extra step and say, not only are we going to raise interest rates, but we're going to have to raise interest rates more, he might be overpromising. And so it's much better to wait, and because the 4th hike, if it comes, we're not going to know until the end of the year. So it's better to be patient and wait for June, and you have more economic data to be able to make that decision. I suspect, though, the problem is that, and this is, I think, the problem not only for the U.S. but for many other countries, is that they're late in the cycle. And so by the time the Federal Reserve might have to tighten more aggressively, just as the economy might be slowing down.
When do you think the trajectory of the prices in the economy will be clearer? Like in the June, maybe in June FOMC meetings, they will show more signals and very clearer to show the U.S. economy?
Well, I think that what happens is that we've already seen this happening. For the last several years, we've had a relatively weak Q1 in the U.S. This time people thought it was going to be different because of the tax cuts, but it doesn't look like it's going to be different. And so I think that we'll get a clearer picture in the spring, early summer. So I would think that June would be another time that we can re-examine this. But there's no reason to bite off more than one can chew right now. You've got 3 hikes planned according to the current dot plots. You deliver the first one in March. You don't have to be in a hurry to commit yourself to a 4th one.
Sure. For both personal and professional side, so what's Paul's the styles in your mind, in your eyes?
Well, I'd say that Janet Yellen was soft-spoken, and she always talked about representing the whole board. And I think that it's different than, for example, Greenspan, who people remember. He used to have a sign, I'm told, in his office that said, if you think you understood what I said, you misunderstood. Janet Yellen was just plain spoken, and there was never confusion, really. And I think there is some learning.
Transparency is very good.
Transparency is very good, but though I would say there was one thing they could do a little bit differently, and this is what I'm encouraging the Federal Reserve to do, is they have a press conference after every meeting. Because they only raise rates, change policy, when they have a press conference, we know, people like me, can help our clients know that out of 8 meetings, they're going to raise rates in 4 of them at the most. So if the Fed wants to raise rates 4 times or want to keep those degrees of freedom, they have to make more than the 4 meetings available. So I think the best way to do it is to do what the Bank of Japan does and what the European Central Bank does, and that is to have a press conference after every meeting.
And also we see the dollar hit a 3-week highs with investors still show their confidence, bullish. Well, what's your side? Do you hold the same view, and what's your prediction on the dollar trend?
Yeah, so I'm reluctant to, even though the dollar sold off last year and began off this year on a heavy tone, I still haven't given up my longer term, big picture, bullish dollar view. If we were to get above on the euro, say 126, 127, I have to reconsider. But we held that level. And I think that what's happening, I think people were very short the dollar, and it's expensive to be short the dollar, and I think this is just a correction, technical correction. We haven't taken out levels yet, though we've come close to them, where it can be confirmed that the dollar's put in a bottom. What I've been following is several currencies. We've got say 10 major currencies. And so I'm looking at where they are in their own trajectories. And right now we're testing the 200-day moving average The dollar is testing 200-day moving average against three currencies: the Canadian dollar, the Australian dollar, which are typically high yielders, commodity type plays, and as well as the Swedish krona. And so I think that what we should be looking for is when the dollar does turn, becomes recovering, if I'm right, we shouldn't look for a V, but we should look for almost like a waterfalls, where where currencies roll over, like the Australian dollar rolling over, Canadian dollar turning over. The euro peaked middle of February, but most of the other currencies peaked in late January. So this February, this month, we're closing it, and it could be the first up month the dollar's had in a few months.
And also, when speaking about the dollar trend, the trajectory, as you mentioned, that people also in China are very focused on the gold market. So what's your focus on the near term, the gold prices, gold market?
So I think that when the dollar gets firmer, typically gold goes down. Goes in the opposite direction of the dollar. How the dollar is doing broadly, gold goes in the opposite direction. It's just like a rule of thumb. It's not something to trade off of, but it's just general trends. And so I think that with the dollar strengthening, we should look for gold at least to consolidate. There's a lot of uncertainties in the world right now, whether it's the German election results, whether they can form a government, the Italian election. We've got still some uncertainty coming up. We've got the end of the fiscal years in the next month. And so I can see gold going broadly sideways. But in the bigger picture, what concerns me is if the U.S. interest rates are going up. Yes. We can talk about 3 or 4 times. Bank of Canada likely to raise rates this year again. Bank of England might raise rates again in May. And so as interest rates rise, the opportunity cost of holding gold becomes more expensive. So I typically think that for most people, gold should just be a very small part, if at all, in portfolios.
Do you think there's still have some upside potential for gold, coming from the renewed volatility in the equity markets and the rising U.S. inflation part?
Well, I think that you find that typically that gold is in the U.S. a lot of Americans don't own gold because the banks are safe. So if you show me a country that has unsafe banks or questionable banks, I'd say, well, those are countries, say like political risks in, say, Venezuela or Ecuador. So there's a lot of places that India sometimes, a cultural demand for gold. But I think that this kind of economic demand for gold is not so much in the West. It's more of a speculative vehicle. But in other countries, especially in emerging markets that have suspect political systems or suspect banking systems, gold becomes the sort of a safe haven of choice.
What's your view on the gold ETFs?
Yeah, I don't know. I think about these, and I think that many years ago I thought that when the U.S. was going to be in some serious economic trouble, so I thought I should buy some gold.
Economic trouble. I
thought I should buy some gold, and then I thought that, well, what am I buying when I buy a gold ETF? Am I really buying gold? Most of them not really. I'm just buying another paper claim on gold. And instead, I thought that what I really wanted, the logic or the conclusion of my logic was to buy the real bullion and not the paper claims. And I think that the ETFs give people the sense that they're buying gold, when for the most part, it's really paper claims. So I do see some companies, some mining companies, you buy the stock and you can convert it after several years, you convert the shares of the company into gold.
And you recommend?
I can't really recommend trades like that, but in general, I think that you really want to see why does one want to buy gold, and is that the most efficient way to express one's views? So if you think that you want to buy gold because the Western economies are slowing down, maybe it's a better way to go short those countries, short those equity markets rather than buy gold. So it really depends on why one wants to buy gold. I can see having gold. The problem with it, of course, it's expensive because it's not yield. It doesn't have a yield stream like a dividend, and it costs money to insure it. And it costs money that you got to put it someplace. And the banks are charging a lot of money at gold vaults. So then you say, well, I can just put it in my house in a safe. They can get ripped off. It's not very secure.
And after we focus on this quarter and until next quarter, so which sector do you recommend to the market investors or our viewers?
Yeah, so I think that I look at things on a very macro level, and so I am concerned that a lot of stock markets are overvalued. But when we had that big sell-off in February, and the stock market, the U.S. approached the 200-day moving average, I sort of like that price action. That's why I would want to be buyer, as near that 200-day moving average. And so what I did then is I actually bought stocks. I had freed up some money at the end of last year because my 401k did fairly well. I thought the stock market's overvalued, so I moved heavily into cash. And then when the stock market pulled back in February, I put about a third of it back to work. And I also put my own personal account, like non-retirement money, into a bit more aggressive, looking for companies that have been beaten up and that might have some value, as opposed to the growth stocks like the FANGs.
Very valuable comments, and thank you so much for joining us today, Mark.
Thank you.